Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and the Tulsa market. I want to talk about financing right now for you, mainly because if you're a new investor, you're going to probably be using Fannie Mae or Freddie Mac backed loans. In other words, that's going to give you the best interest rate. And that's a federally, backed loan if you put 20% down or more. No mortgage insurance. And so that's one way that you can go about it. Now, Fannie Mae has a 10 mortgage limit. So that includes a first home, a second home, investments, whatever it happens to be. They're not going to give you anything more than 10 properties that you can have a mortgage on. Now, there's a second kind of mortgage called DSCR, debt service coverage ratio. Excuse me, I've been a little sick. I don't know if I said that right. Debt service coverage ratio. What that means is you can buy a property on DSCR, which is not federally backed. It's a non-conforming conventional loan. And you can get your 11th property, your 12th property, or maybe even you use it potentially for your 8th property. Why would you do this? Well, in Fannie, you got to qualify you got to qualify based on your personal income. Now, properties can count as a personal income, but that's what it's based on. A DSCR loan is based purely on rental. In other words, let's say you retired and all you have, Social Security and a lot of assets. But if you have 6 or 7 or 8 properties or whatever, and they're cash flowing, what they're looking at is that you can cover the mortgage with the rents for those other properties. Now, that's one thing. Now, back to Fannie Mae, for instance. If you do a Fannie Mae loan, you're limited to a seller, builder, individual, whatever it happens to be, to a 2% closing cost allowance. And so if we take a DSCR loan, which is a 30-year fixed loan, you still have a higher rate that you've got to pay versus the base rate on a Fannie Mae. But where you have the 2% limit on Fannie, you've got a 6% closing cost allowance on DSCRs. Basically, what that means is if Fannie is a 5.875 with a 6% closing cost allowance, you can take that money and equalize it to 5.875. And so that is something that's really cool. It's also something that gives you a broader reach, especially if you're retired or if you're at the 10 property limit. Now, there is one thing that's different also about a DSCR and a Fannie Mae loan. A Fannie Mae loan does not have a prepayment penalty. In other words, if you sell it in 1 year, fine. In the case of a DSCR, they're going to have anywhere from a 1 to a 5 year prepayment penalty. In other words, if you sell it in the first 1 to 5 years, you're going to pay a penalty. Now, typically, what we're seeing is 3 years as a prepayment penalty in terms of the mortgage companies that we deal with DSCR. So, if you're a 7 or 8 property person or a 10 property person, you're not going to be selling within the next 3 years. You're a long-term hold person that has built up a lot of inventory in homes. And so that's not going to bother you at all. But I do want to make you aware of that. So when we get together, if you're a new investor or an experienced, investor with a lot of properties, we're going to talk about these two different things. If you're a first-time investor, definitely going with a Fannie Mae type loan. If you're an experienced investor with properties, we're going to deal with a DSCR loan. Those are the two kinds of loans you can do as a real estate investor.